Leave a legacy and not debt. Welcome to Affordable Final Expense, where we do all the shopping and you do all the saving. Hello again, it's Mike Lucy, and today what we're going to be doing is a case study for 60-year-old women. We're going to do non-smokers, smokers, and women with health issues. So please do bear with us as we walk through the video, go through each of these cases. One of the things that you'll find in this video on YouTube is a table of contents where you can easily click ahead to the section that's most relevant to you, so you don't have to listen to me talk about something that's not important to you. All right, are we ready? Let's get started. Okay, so what we're looking at here is the quoting screen that we use here to prepare quotes for our clients. Please note, I've used a lot of quoting tools in my time. This one is the best quoting tool in the marketplace, bar none. And I don't know of many people in Michigan that are actually using this. So a little shameless plug there. So let's get started with filling this in, and I'm going to discuss how we're filling the information in as we go along. I filled in the zip code 48192. Up here in the upper right, it's going to fill in the city and the state. Please mind you, it could be any zip code in Michigan. The rates are all going to be the same for Michigan, okay? And we're going to do the age. Once again, we're doing 60-year-old female here, non-tobacco, face value of $10,000. Quick note about $10,000. I call this the Funeral Plus package. If you go out to the internet and you search for what is the average cost of a funeral, you're going to find that the average cost, depending on what article you read, is going to be anywhere from $7,500 to $8,500. You might find a couple above that or below that, but we'll just call it $8,000. Call it Funeral Plus because if you get a $10,000 policy, there's going to be a little bit of money left over for your family. And the next one here is level benefit. And we're just going to leave it at that for now. We're not going to talk about graded or modified. And then underwriting type is full or guaranteed. I don't like the word full myself in this case because what we're looking at is simplified issue policies, meaning no medical exam. Okay, there will be health questions, but there will not be a medical exam. Now below this is guaranteed, and please listen carefully. Guaranteed. If you have ever seen the Colonial Penn commercials with Alex Trebek, you might remember Alex saying something like, and with the Colonial Penn guaranteed acceptance life insurance policy, if you've heard that, what he's talking about is this, guaranteed issue. And what that means is no medical questions. But what they fail to tell you, and many companies will fail to tell you, is since there's no medical questions, that company's willing to take on people in good health, moderate health, bad health, and what I call hopeless health. They're willing to take anyone on and make a blind bet on that consumer. Well, guess who ends up paying the price for that? You. Why it's important is if you're in good health, if you're in moderately good health, even if you have some major health condition or issue, it's worth your time to investigate full or simplified issue before you jump into the guaranteed issue policy process. That's my recommendation for now is don't give up hope. Look for a simplified or issue or full policy before you go guaranteed. Each time we run a quote, we will put a customer's name in here. At the end of this process, what we have is a report that we can send directly to the customer or client that asked for them. I'm going to press get quote, and within 5 or 10 seconds, we are going to have our quotes for a 60-year-old non-smoking female looking for $10,000 worth of coverage or the Funeral Plus package. And we're going to go through this screen real quick, explain what it is, why it's important, and what you should know about the rates and the quotes and the companies and the policies. At the top of the list, we have $30.06 from Trinity Life Insurance Company. The plan name is First Whole Life, $10,000 to $50,000. And I'm going to highlight in green right now. So this policy is the lowest price policy in the marketplace, period, bar none, no exceptions. It is what it is. It's the lowest price policy. Now, we're going to see some disadvantages to this policy here shortly. Namely, if you have medical issues, the agent you're working with or the broker you're working with, if they are able to represent and sell for Trinity, they're going to have to call the back office, the underwriting team in the back office to ask questions about health. There's nothing publicly available for me as a field underwriter or an agent to be able to quickly look up that information. It does, if you have health issues and you're interested in this, I must make a phone call, or our team must make a phone call. If this policy is not available, or you have a health condition that disqualifies you from it, we're going to get rid of it and then look at the next set of options available. You'll see it's Trinity Life again. So Trinity Life Insurance, but this time the plan name is Golden Eagle. If you look right below it, you're going to see that Family Benefit Life Insurance Company. They have the same rate, $32.60, as Trinity. The plan has the same name, Golden Eagle. Why is that? Well, truth be told, these are the same companies. They have two parent companies for reasons of operating between state lines, or from, that's the wrong way to say it, operating from state to state. Trinity and Family Benefit Life both operate in Michigan, but in other states you'll find one but not the other. One other thing to note about Trinity and Family Benefit Life, I have a couple things to note about them. Number one, they're one of two carriers that will accept Social Security Direct. They will accept Direct Express. There's 6 companies that accept Direct Express. They're one of them. But they're only one of 2 companies that accept SSI and SSDI Direct. And what do I mean by direct is they will only take payments when the SSI or SSDI benefit is deposited into the account of the recipient. So you never have to worry about them taking payments early. They're always going to take them when that account is funded. Very important. The other thing I have to mention about Trinity and Family Benefit Life is we use these as what I call price buster companies and policies. And why is it a price buster? Well, what happens is on occasion we'll receive a phone call from someone that says, hey, I bought a policy 2 years ago, 3 years ago, 4 years ago, whatever the number is. And they say, I'm shopping around to see if there's a better rate. Well, in this industry, what happens is every year you get older, your premiums go up. So if you bought a policy 5 years ago, it's absolutely impossible for you to get that same rate now, 5 years later. What you can look around for is a company that might have a lower rate just because they have a lower rate in the marketplace. And in these cases, Trinity and Family Benefit Life are truly price buster deals because they may allow a customer or a client to get a lower rate despite having another policy that was written many years ago. It's important to note there. Finally, as we go down the list, we see United of Omaha, which is also known as Mutual of Omaha. Hopefully you've heard of them. If not, maybe you remember the Wild Kingdom commercials back in the day. They're priced at $32.87 a month. Life Shield, quick note about Life Shield. Life Shield is and can be, and in many cases is, our price buster for smokers. They have great smoking rates. And then below here we have Transamerica, or what some of us in the industry call Transamendment. So Transamerica is great because they have very lenient underwriting. If other companies won't accept your health conditions, Transamerica is a great place to look because they have much more lenient underwriting than other companies. They'll accept conditions that other companies will not. Transamerica, as mentioned above, is the second company that has direct SSI and SSDI payment options available. Only 2 in the marketplace, Trinity and Transamerica, do that. They're one of the 6 that accept Direct Express Social Security, the little green card. So that's good to know. Now, the bad news with Transamerica is, as I mentioned, we call them Transamendment. Transamerica has a paper application process. So both Transamerica and Trinity require that the field underwriter come out to your house, or that you meet in person somewhere. You come to their office or meet somewhere, whatever it is, and fill out the application in person and sign it. Transamerica, we call Transamendment because many times when the application is submitted, the field agent and or the client have to redo something on the application and sign an amendment and send it in. It can be a very lengthy process. Don't let that scare you. The benefits of Transamerica are well worth the risk of having to do an amendment here or there. So as you scroll down the list, you're going to see some names that you may or may not be familiar with. There's Oxford. Foresters is my favorite. I'll be honest with you, I love Foresters. There's Cigna, PHL, so on and so forth. But these are all, secondary because we already know what the top options are. So the last thing I'm going to add or contribute to the conversation about a 60-year-old female non-smoker that wants $10,000 is, if my mother was 60 years old and was a non-smoker and she said, Mike, which of these policies would you select for me? or which would you recommend for me? And I would say Mutual of Omaha. It's not even close. For the extra 17 cents per month, you're dealing with an A plus rated, an AM Best rating of A plus. You're dealing with a company that's been doing business for 150 years. They got to be doing something right. And, it's just a better brand. There's nothing wrong with Trinity, and there's nothing wrong with Family Benefits Life. Their rating isn't included here, but last I looked, they are B plus rated, I believe. Don't quote me on that. Um, but it's worth 17 cents more per month for the United of Omaha or Mutual of Omaha option. All right. So I remind you on this video on YouTube, we're now going to fast forward to the smoking option here. In YouTube, there's going to be a table of contents where you can click and go directly to any of these. So we're going to be looking at non-smokers, smokers, and people with health conditions. And you can easily navigate to the part of the video that's most relevant for you and not listen to me talk about things that are not relevant to you, saving you a lot of time in the process, but still giving you the information that you need to make the best decision possible for you and your family. All right, here we go. The smoking rates. At the top of the list, we have Americo at $38.46 per month. Americo is a great company, A-rated. Their policy is called Eagle Premier. One small note here is they promote their policy as smokers get non-smoker rates. We have to read the fine print. We're going to come back up in a minute and talk a little bit more about that fine print. But for now, they're at the top of the list, priced at $38.46 per month. And if you note, they're about $6 more than the non-smoker rates. And that comes out to about 18%. So what I found in the industry is smokers are going to pay anywhere from 18 to 22% more than non-smokers. Next on the list is Trinity, and they're at $39.34 per month. And you can see it's that first whole life policy again. This more often than not requires the agent, your independent agent or broker to reach out and call the back office underwriting team at Trinity to be able to make sure that you are eligible or you do qualify for this policy. As we scroll down the list, we have Life Shield at $41.56 per month, B++ rated. Life Shield, like I mentioned earlier, is in many cases for different ages and different genders, is our price buster deal for smokers. So Life Shield is always in play. It's always in the playbook for smokers. We go down, we see Mutual of Omaha for $44.67 per month. Once again, A+ rated, so on and so forth. And there we see Transamerica again at $45.17 per month. Transamerica, once again, we talked about the trans amendment, many amendments. Many of the times they ask for amendments to an application. It can be a lengthy application process. It is paper driven, does require an in-person interview with your underwriter, so on and so forth. Beyond that, lenient underwriting, they do accept Social Security, SSI, SSDI direct. They'll take the funds when you get paid, when that account is funded. And they also take the little green card, Direct Express. You scroll down, you see the usual suspects as well. So we go back to the top of the list, and the last thing I'd like to note about the Americo product here, the smokers get non-smoker rate advertising that you'll see for Americo is in the fine print. It will say that you have 3 years to quit smoking. If you don't quit smoking within 3 years, then on 3 years and 1 day, they're going to raise your premium or decrease your benefit, one or the other. It is what it is. Finally, in closing, for smokers, if you were to ask me, Mike, well, what if your mother was a 60-year-old smoker and asked for a $10,000 plus face value death benefit or a funeral plus policy, what would you recommend? I would recommend either Life Shield or Mutual of Omaha. Probably kind of steer the ship in the Mutual of Omaha direction just because of the brand name and the company. It's very powerful. That extra $3 a month is well worth it. If, however, I was convinced that that person, my mother or whoever it is, I'm convinced that they're committed to stopping smoking, I would recommend Americo. However, if someone smoked for 20 years, 30 years, 40 years or more, the reality is that a $7 discount or a $7 lesser rate on an insurance policy is not enough incentive for that person to quit smoking. So, for 3 years worth of lesser premiums, is it worth it to have that go up after 3 years if you don't quit smoking? That's for each and every person to decide, but the reality is people won't quit smoking to save $7 a month. All right, now what we're going to do is we're going to take a look at a couple health conditions, and we're going to see how the health conditions impact rates, the order of carriers, and the eligibility of people on a carrier by carrier basis. This, by the way, is one of the most valuable parts of working with an independent agent or broker. Okay, and I'm going to emphasize independent agent or broker is having health conditions. The minute you have a health condition, I recommend highly that you find the most trusted independent agent or broker you can find and get with them and discuss or explain or describe your health conditions and let them go to work for you. As opposed to the other side of the fence is the captive market. And I don't want to get into semantics or fancy definitions, but a captive is someone that sells for companies such as State Farm, Farm Bureau, Allstate, AAA, AARP, even Colonial Penn. They're captive because when you speak with someone that's selling any one of those I just mentioned, they're selling for one company and one company only. And you're going to be captive to their underwriting standards. So if they don't accept a condition, they're either going to give you one of two answers, yes or no. No options, nothing in between. It's just a straight yes or no. Some cases you may have consumed or wasted a lot of time just to get a no. We don't want that. So when you have health conditions, especially serious health conditions, and even more importantly, if you have multiple health conditions, it's absolutely imperative that you reach out to an independent agent or broker. I or we would love to be that person that you trust, but for your best interest or for your sake, just make that phone call to a trusted independent. They will certainly help you out. I'm going to type stent in here, and we're going to click this little checkbox. Hold on, if you can't see what I'm doing, you should be able to see what I'm doing. Over here, you'll see it says heart or valve surgery, including bypass and stents. And what happens is it's now going to add a row right here of additional information. Now, you don't see this necessarily until you get the report, but the underwriter, you might be on the phone or you might have given him or her the information, and they're going to work for you, and they're trying to find that perfect company, perfect insurance company, the perfect policy and the lowest rates. So what they're looking at is this right here. It's called the look back period. Look back period simply means the insurance company wants to know when is the last incident or event of that health condition. When was it last diagnosed? When was it last treated? Look back period in this case means 2 years. I have highlighted right here. If it's a look back period of 2 years, it means if it's happened within 2 years, you rewind the clock and it's happened within 2 years, they're not eligible for the Americo Eagle Premier level product. So as we scroll down, you're going to see the Trinity Life Insurance Company first whole life 10 to 50,000. Once again, here's where an agent that's able to represent and sell for Trinity, like us, is able to pick up the phone and call the underwriting team and talk about your case and see if you qualify or are eligible. And it will save you a lot of time and headache in the process. As we scroll down, you'll see Life Shield has a 2-year look back, Mutual of Omaha 2-year look back, Transamerica 2-year look back. Everyone has a 2-year look back on stents and surgeries. And I believe there's one towards the bottom we're going to find it's a little bit different. There you go. Aetna only has a 1-year look back. And this is a great example. If you're working with an independent and you had a heart, a valve surgery, a bypass, or a stent done, say, 14 months ago, a little over a year ago, so you're less than 2 years out, but more than 1 year out, you can get an Aetna policy to cover you in the interim while you wait for a better policy to become available in 1 year from now. So there's no sense in waiting. You can jump on that policy right now. You might pay a little bit more for it, but at least you have something. Something is better than nothing. And one of the things being out in the field and talking with hundreds of people about insurance is many people lose hope. They lose hope in that they don't think that they're insurable or they think it's going to cost too much. And one of the reasons I do these videos is to provide hope. Yes, you are insurable. Yes, you do have options, and No, it's not going to be that expensive. Let's talk about your options and let's see what fits you best. And let's look at not only a plan or a strategy for today, like we just did with the Aetna stent or bypass, is let's put a plan in place today, but also have a plan for tomorrow or next year where you can reclassify into a better health class, get a better rate, get a better plan, get a better policy. Okay. Excuse me. One thing to note here is if I change the tobacco status to non-smoker or non-tobacco and I get another quote, we are going to find something very interesting. And it's coming, it's on its way. Here it is. We scroll down and we're going to look at stent once again. And we scroll down and we find Americo. Americo, where are you? There you are. Their look-back period, Americo, look-back period for a non-smoker that had heart or valve surgery or bypass or had a stent implemented is only 1 year. So if you're a non-smoker, this is an amazing rate. Americo Financial, right here, the Ultra Protector Series, A-rated. It's an incredible option. And if you feel as though $37 a month is a little bit high, well, one of the things that we just mentioned you can do, and incidentally, $37 for a 60-year-old female with heart issues for a $10,000 policy is incredible. But even if you still feel that might be a little bit high, what you do, as we previously mentioned, is you can purchase that policy, get something's better than nothing, and then a year later you can reclassify or requalify for a better policy up here. So you can save a couple bucks along the way. And that's part of a longer term strategy. Something to think about. Um, Once again, if you have health conditions, it's absolutely imperative that you reach out to an agent, preferably. And you know what? I'm going to say insist. I insist that you find a trusted, independent agent or broker to talk about this with. They will go to work for you. They will put in the time, and they will find out what you're eligible for, what you qualify for, and how to help you come up with a plan to make sure that your family's protected. That's all I have for this video right now. Uh, Once again, I want to thank anyone and everyone that's watched this, either from beginning to end or jumped in and watched parts of it. I have so much passion for what I do here. I try to make it as easy as possible for you to understand. I do all the hard work on the back end. I would love an opportunity to talk with you about what are your needs, what are your wants, and to be able to come up with a plan for you. I forgot one thing, and I would like to go through it real quick, and then we'll wrap it up. When I'm out in the field, one of the things that I come across is I'll speak with someone on the phone, and they'll say, "Well, I've already got 3 or 4 quotes. It's way too expensive, and you're just like everyone else." I said, "No, no, no, no. Please, just give me a chance. Give me a chance." What's happened before we have got there is that I call it going for the jugular. So that person has spoken to an agent that automatically assumed that this person wants to get a quote for X number of dollars, a funeral plus package, or I call it going for the jugular because they're coming out of the gate with the highest amount of premium or a death benefit possible because it puts more money in their pocket for commission. I don't do business like that, and we don't do business like that. One of the questions we ask before we start running quotes is we explain that I'm going to run this quote for you. We're going to do it for $5,000, which I call the cremation plus plan, which covers the cost of cremation plus a little bit extra. And I'm going to run it for the funeral plus plan, which covers the cost of a funeral plus a little bit more. However, I'd like to ask you one quick question. If you can't answer it, just simply say, "Mike, I can't answer it." And then we'll move on. The question is, if there was a perfect monthly payment or premium that you could pay that fits into your budget or lifestyle that you'd be willing to pay, what is that number? Half of the time, I'll say 2/3 of the time, someone gives me that number. So then what I can do is I can prepare yet a third report. And let's just say I'm speaking with Betty Sue off of the street, and Betty Sue says, "Oh my God, no one's ever asked me that, Mike. Yes, I can afford to spend $30 a month. What am I eligible for?" Better yet, she says, "I only have $20 a month. What am I eligible for?" Well, here's what you're eligible for, Betty Sue. We run the quotes on the back end, and what's going to happen now is it's going to reorder. It's going to reorder the list of insurance companies, and it's going to present to us how much benefit you get for that dollar amount. So when Betty Sue said, all I have is $20," that's it. What am I eligible for? Well, right here, Betty's eligible for $5,803, which is a cremation plus plus. If a cremation plus policy is 5,000, then 5,800 is a plus plus policy. So then as you scroll down, you'll see that there are a lot of options for that $20 a month. There's not a lot of agents out there that actually communicate this. Most agents will actually do this for you if asked, but no one's asking you to do it. They'll wait to be asked, but no one's asking you. And that's one of the things that we do each and every time is ask you, what is your budget? We'll make this fit into your budget. Just let us know. And if the person says, no, Mike, I'm comfortable with what you're going to do, then so be it, we do it. But at least we ask the question and we make sure that we're not making any assumptions about their budget and we're not surprising anyone with a price tag. Sorry I didn't include that back up earlier, and now this is going to be the second time that I sign off. Once again, my name is Michael Lucy from Funeral Funds of Michigan on Facebook, the Leave a Legacy and Not Debt podcast and video channel. More than welcome. Feel free to give me a call anytime. You can call or text me anytime at 734-288-8323. I'd like to thank you so much for watching this video. If you have any comments or questions, leave them below, and I will get back with you as soon as possible. Have a great day.